So, Chris, you've now taken multiple companies public through Spring Valley across some various different market conditions. We've seen ups and downs. How has your approach to evaluating and structuring deals changed since your very first SPAC?
Not a lot. Our focus has always been on trying to bring unique assets into the public markets, ideally first movers or a quick second. Deals in which there are 10 or 20 or 30 publicly traded companies aren't really a focus for us. We really pride ourselves on uniqueness, and we've been able to do that in our first two deals. In addition, we are very focused on properly funding these companies, 2 years plus of cash at close, guaranteed. One of the flaws we see within the SPAC market is undercapitalization. And I think that has led to underperformance. So we're laser focused on that. Very focused on fair value. I think that's another thing that has harmed the SPAC market, overvaluation, sponsors not, getting that component correct in the front side. Very focused on having good advisors, lawyers, accountants. Lots of deals get hung up. People that are not in the product day to day. It's a complex product. And so having subject matter experts seem to enable smoother execution. And we've had that in both of our first two deals. We filed our S4 within 3 weeks from announcement. Certainly look for strong characteristics within the companies, the IP barriers, the moat, so to speak. Very focused on competent teams, and teams that are not only competent and skilled, but teams that know how to make money, and teams that know how to take advice. So those are things that have always been core to us. I think in the first wave in the 2020 timeframe, you might have been able to count on a brief moment some of the trust. I think as we've evolved, you have to be very careful about counting on trust to fund company post-close. Redemptions are still relatively high. There's still a lot of volatility in and around the redemption number. So we're very focused on either having cash on hand and or pipe to backstop redemptions. And then the redemptions, if they're low, and we've had low redemptions in both of our first two deals, that's just icing on the cake.